Hi everyone, in this video we'll be going over A-Level Accounting 2023, May-June, Paper 3-2, question number 1. This is a structured paper 3 which consists of 3 questions. Each of them will be of 25 marks and we're also given a total time limit of 1 hour and 30 minutes, which means that ideally you should be spending about 30 minutes in order to solve each question. And in this video as well, we'll be attempting to solve this question under 30 minutes. So without any further delay, let's get started. NT Sport Club runs a gym and operates a cafe. The treasurer provided the following list of balances of some accounts. Okay, we are given club equipment carrying value at 31st December 2022, which is our closing date, and 31st December 2021, which is our opening date. We're also given information regarding cafe equipment, cafe wages in arrears, heating and lighting in advance, subscription owing, subscription prepaid. We're given cafe payables and cafe inventory. Alright, and the treasurer also prepared a summary of the bank account for the year ended 31st December 2022. So the debit side will represent all of our receipts and the credit side will represent all of our payments or the expenses. Okay, and we're again given additional information. The following information is also available. All the cafe sales are made on a cash basis and cash received from cafe is banked. We're given cafe takings right here, so this amount just represent the cafe sales which we have banked, and wages of 14,400 were paid out of cafe's takings before they were banked. So what this means is that 14,400 were also cafe sales which had been taken out to pay the wages before banking our cafe sales. So the total cafe sales is just going to be the amount that we banked, which is 55,000. And then the wages amount which we took from cafe sales before banking it. So that's going to be 14,400, which gives our total cafe sales to have the amount of 69,400. Alright. Then cafe inventory at 31st December 2022 included items with a cost of 2,200 and a net realizable value of 300. So we know that we value inventory at the lower of cost and net realizable value. In this case, our cost is 2,200 and the net realizable value is 300, which means that clearly we should be including this inventory at the value of 300 rather than at the value of 2,200. So let's figure out our cafe inventory at 31st December 2022. So this is the closing date. So our closing inventory, we start with the value given above. We have cafe inventory right here. And for 31st December 2022, it has a value of 6,400. So from 6,400, the first thing that we need to do is exclude this cost of 2,200 because it is higher than the net realizable value. So we're just going to subtract the 2,200 and then add the 300 because this is the value at which this cafe inventory should be valued in our closing inventory. So we'll just add the 300, which gives the correct amount for our closing cafe inventory to be 4,500. All right. Then life membership was introduced on 1st January 2020 and each life member has to pay 2,000 on the date of admission. The life membership fee is to be transferred to the income over 10 years in equal amounts. The number of new life members admitted each year is as follows. Now let's figure out the life membership fee for the year ended 31st December 2022. Because we are told that the 2,000 actually refers to 10 years, but it is being divided among 10 years and transfer to the income in equal amounts. So let's calculate the number of members for the year ended 31st December 2022. So remember that the members introduced in 2020 will be paying the fees till the year 2030 because we are to transfer to income over 10 equal years. And 10 years from 2020 is 2030, which means that we obviously need to include their fees in the year 2022 as well. So is the case for 2021. They will have to be, or we just divide the amount that they paid over the years till 2031, right? Which definitely includes 2022. So the total members is just going to be 6 plus 10 plus 12, which is 28. So the total life membership fee for 28 members is just going to be 28 times 2,000. But remember that we are to divide it over 10 years in equal amounts. So for 1 year, it's just going to be divided by 10. So this gives the life membership fee for the year ended 31st December 2022 to have the value of 5,600. This is the amount that we need to include as an income in our income and expenditure account for the year. Alright. Then rent and also heating and lighting are apportioned 40% to the cafe and 60% to the club. Let's figure it out. So we can write down club and cafe. We are trying to apportion our rent and heating and lighting. Okay, let's figure out the total for rent. We are given rent right here to be 18,000, and we also need to look for any of the adjustments that we need to make, such as our outstanding rent or our prepaid rent. And in this case, we are not given any additional information regarding rent, so we can just consider 18,000 as our total. Now for club, we need to apportion 60%. So that is just going to be 18,000 into 60%, which results in the value of 10,800. We repeat the same process for cafe. So we have the total of 18,000, and we know that 40% is to be apportioned to the cafe. So we just multiply it by 40. And this results in rent to be apportioned to cafe to have the amount of 7,200. Now we repeat the same process for heating and lighting. We are given heating and lighting right here to be 7,500. And we also have an adjustment. So we have heating and lighting in advance. And for the closing date, we have an advance of 900, and for the opening date, we have an advance of 1900. So always remember that for advance, we need to subtract our closing dates amount. So we need to subtract 900, because this 900 actually refers to the heating and lighting for the year ended 31st December 2023, right? And we just need to add our opening advance, which is 1900, because this refers to the heating and lighting for the year 31st December 2022, which was actually paid for in the year before. Now this gives the total heating and lighting to be 8,500. Let's divide it among our club and cafe. So for club, that's 60%. That's 8,500 into 60%, which results in the value of 5,100. And for cafe, that will be 8,500 into 40%, which results in the value of 3,400. Okay. Now for club equipment, with a carrying value of 4,800 was sold for 2,000. So we actually had the net book value to be 4,800, but we only sold it for 2,000, which means that we received lower for than what we actually anticipated. So this results in a loss on disposal. So the loss value is just going to be the difference between our carrying value and our disposal value. This results in the value of 2,800. All right. Then both the club equipment and cafe equipment are to be depreciated at 20% per annum using the reducing balance method, which means that we need to multiply this rate to our carrying values. And a full year's depreciation is provided in the year of acquisition and none in the year of disposal. Okay, let's figure out the depreciation as well. So let's start with club equipment. And always remember that we need to check for any of new purchases for such assets. So we have the carrying value of club equipment at the opening date to be 76,000. Now let's check for any new purchases. And that is definitely given in our payment section of the bank account. We can see the purchase of club equipment right here to be 13,000. So we need to add this amount because we need to charge the depreciation of the entire year to this amount of 13,000 as well. And also remember that club equipment with a carrying value of 4,800 was sold for 2,000, which means that we no longer need to charge depreciation into this amount. So we're just going to subtract it. And then we can charge 20% to the resulting amount. So the depreciation on club equipment is just 16,840. Now we just repeat the same process for cafe equipment. We start with the value given above. So that is 22,000. And we can also see that there was a purchase of cafe equipment of 8,800. So we need to add this amount as well. So that is just going to be 22,000 plus 8,800. And we need to multiply this by the rate of 20%, which results in the depreciation of cafe equipment to be 6,160. All right. Now, what else can we adjust for? Okay, we are given annual subscriptions right here. This is the annual subscriptions that we actually banked, and we're given subscriptions owing and subscription prepaid right here. So we can figure out the subscriptions amount for the year ended 31st December 2022. And this is just going to be the amount that we need to include as an income in our income and expenditure account. So firstly, we start with the amount given in bank, which is 68,000. And this is the amount received. So we just need to adjust our owing and prepaid. And always remember that the prepaid or the closing prepaid should be subtracted because this is of the next year, which means that our opening value should be added. And if our closing prepaid is being subtracted, it definitely means that our closing owing should be added, whereas the opening owing should be subtracted. So we just need to add 3400, subtract 2000, subtract 1400, and then add 1200, which results in the subscriptions amount to be included in our income and expenditure account to have the value of 69,200. Then we are given cafe wages in arrears. So let's figure out the cafe wages amount as well. We were given the wages amount that we took from our cafe sales to be 14,400. So we need to adjust the arrear amount to this amount. And remember that cafe wages in arrears just means that these are the outstanding amounts, and the closing outstanding should always be added, whereas the opening outstanding should be subtracted. So we're just going to add the 3,250 and subtract the 2,730. And this results in the total cafe wages to be 14,920. Okay, we did this and this as well. So we have cafe payables next, and we are given the payment for cafe suppliers right here. And this is the amount that we paid to our suppliers for the purchases that we made. So we can actually just figure out the total purchases as well. We start with the amount that we paid to the cafe suppliers, that is 31,600. And we need to adjust our cafe payables. So remember that the payables at the end date or the closing date is just the amount that we need to pay for the purchases that we made in this current year. So this definitely is the purchases for the year ended 31st December 2022, which means that we need to add this amount. And for the opening date, this actually resulted from the purchases that we made in the year 2021, which we do not need to include for the purchases in 2022. So we're just going to subtract the amount of 16,600. And this results in the total purchases or cafe purchases to be 29,800. Okay, we adjusted cafe inventory as well, and we utilize our club equipment and cafe equipment in order to figure out their respective depreciation as well. All right. Okay, I think we can move towards the first question now. We need to prepare a statement to show the profit or loss for the year ended 31st December 2022 for the cafe. So this is just going to be our statement of profit or loss. And this is for the year ended 31st December 2022. Okay, again, this is statement of profit or loss, which means that we start with our revenue. And we already figured out the total cafe sales. That is our revenue. We can just include this amount of 69,400. The next step would be to move towards our cost of sales. And in cost of sales, we just start with our opening inventory. We then add all of the purchases, and this is going to be the cafe purchases that we just figured out. Then we subtract all of our closing inventory. Okay, let's look for these amounts. So opening inventory is given right here, that's 5,900. Then we just figured out the purchases to be 29,800, and for the closing inventory we actually figured out the new value to be 4,500. So let's write down these three amounts. And now we can figure out the total of cost of sales by adding these three values. So that's 5,900 plus 29,800 minus 4,500, which results in the cost of sales to be 31,200. And we're going to subtract it from our revenue in order to figure out the gross profit. Okay, that is just going to be 69,400 minus 31,200, which results in 38,200. Now the next step would be to subtract all of the overheads relating to our cafe. Okay, so we have cafe wages, and we already figured out the correct amount to be 14,920. Let's write it down. Then we also figured out the depreciation on cafe equipment to be 6,160. We need to charge it under our statement of profit or loss as well. And that's depreciation on cafe equipment. And we are also told to apportion rent and heating and lighting to cafe, and that was of 40%. We've already figured out the amount, so we just need to include 7,200 and 3,400 under the heading of rent and heating and lighting. So for rent, we figured it out to be 7,200, and we also had heating and lightings. And that was 3,400. Let's have a look for other overheads of our cafe. We did the wages, we did depreciation, we did heating and lighting as well as rent, and that's all. So we can just figure out the total for our overheads. That is just going to be the sum of these four amounts: 14,920 plus 6,160 plus 7,200 plus 3,400, which results in 31,680. Now we need to subtract it from the gross profit in order to figure out the profit for the year. That is just going to be 38,200 minus 31,680, which results in 6,520. Okay, this concludes our statement of profit or loss as well as the first part of this question. We can now move towards the second one. Okay, we're given the working section right here. So you guys should be showing all of your workings for rent, heating and lighting, depreciation, cafe wages, purchases, and closing inventory in this part, rather than scribbling all over the insert like I did. Make sure you include all of these workings in the particular box so that you get your markings correctly. I'm just scribbling all over the paper because that's easier for me to show the workings to you guys. Alright, now for the second part, we need to prepare the club's income and expenditure account for the year ended 31st December 2022. This is the income and expenditure account. And this is for the year ended 31st December 2022. Okay, the format for income and expenditure account is pretty easy because we just need to add all of our incomes, then we need to prepare next section including all of our expenditure, and then we just figure out the difference between our income and expenditure. If it's a positive difference, that is going to be surplus for the year, and if it's a negative difference, that is going to be our deficit for the year. Let's start with the income section. So the only incomes that we will be including will be our subscriptions, our life membership fees, and our profit from the cafe. Okay, we have already figured out the values. For subscription, it was 69,200. For life membership fees, it was 5,600, and we've already calculated the profit for the year, that is 6,520. So let's include these three items as our incomes. The first one is subscription. We calculated it to be 69,200. Then we had life membership fee. And we calculated it to be 5,600. We then have profit from cafe. We calculated it in the first part to be 6,520. And since this is all for our income, we can just figure out the total by adding these three amounts. That's 69,200 plus 5,600 plus 6,520, which results in 81,320. Now for the next section, we'll be writing down all of our expenditures. Okay, so we can just start with the club equipment's depreciation of 16,840. So that's depreciation on club equipment. We figured it out to be 16,840. Okay, we then also apportioned our rent and heating and lighting to club. So that was 10,800 and 5,100. Let's write it down. So we have rent, that was of 10,800, and heating and lighting, that was of 5,100. Okay, then what else do we have? Okay, we are given rent. We already included that, and this as well. We are also given the club administrative expenses, and there were no adjustment towards it, so we can just substitute this amount. That was club administrative expenses, and the value was given to be 40,150. Okay, and there was also a loss on disposal that we calculated. It was 2,800. So that's loss on disposal of 2,800. Let's see if we missed any items. We have included all of it, so we can just figure out the total for our expenditure section now. That is going to be the sum of these 5 amounts. So that's 16,840 plus 10,800 plus 5,100 plus 40,150 plus 2,800, which results in the total of 75,690. And we just need to subtract it from our total of incomes, and we can just figure out whether there was a surplus or deficit. In this case, we can clearly see that the income is greater than our expenditure, which results in surplus. So the surplus is just going to be 81,320 minus 75,690, which results in 5,630. This completes our income and expenditure account as well as the second part of this question. Let's move towards the third one. Again, we're given the working section right here. So instead of scribbling in our insert, you guys should be showing all of the workings for rent, heating and lighting, depreciation, and all of the items in this particular box so that you get your markings correctly. Now for the third part, we need to prepare a statement showing the movement in the accumulated fund for the year ended 2022. So this just means that we need to start with our opening accumulated fund. So that is the accumulated fund at the date of 1st January 2022. Then we need to add the surplus or deficit that we figured out from our income and expenditure account. In this case, we figured out the surplus. So we'll be adding surplus for the year to this accumulated fund, and then we can just figure out our closing value of the accumulated fund. So that is going to be the accumulated fund at 31st December 2022. So always remember that whenever you're asked to prepare the movement in the accumulated fund, you just need to show these 3 items. Now we have already figured out surplus for the year to be 5,630. Let's include this amount. Now we need to figure out the accumulated fund at 1st January 2022. So always remember that accumulated fund is basically the capital for our club and societies, right? Which means that we can just follow this equation. So asset equals to our accumulated fund plus liabilities. This is the equation for our club or society. And this just means that our accumulated fund is going to be the difference between our assets and liabilities. All right, we're trying to figure out the opening accumulated fund, which means that we need to utilize these amounts. In this case, we're given the total right here. And this net total just refers to the difference between asset and liabilities that are mentioned here. So we can just start with this amount of 87,270. And now we just need to include those assets and liabilities which have not been included right here. So clearly our bank is not included here, and we're given the opening balance for our bank account right here. That's 76,800. And remember that bank is our asset. So we're just going to add this amount of 76,800. And there is one liability that is missing, which is our life membership. Because remember that we have already received 2,000 for the next 10 years, but we have been transferring it to the income statement over 10 years, right? And we are currently calculating the accumulated fund at the end date of 2021. So we're looking at this date. Now, for the 6 members admitted in 2020, we have only included their membership fee as an income in our income and expenditure for the 2 years, which means that the fees for remaining 8 years will be our liability because we have already received it, but we are yet to provide the service for those amount, right? And for the year 2021, we have included it as an income for only the current year, which means that the 9 years income, we need to treat it as a liability because we have already received the amount, but we are yet to give the service for that particular amount, right? So we're just trying to figure out the corresponding amounts for the 8 years and 9 years as our liability. Okay, so for 6 members, they paid 2,000, but the liability amount will be only for 8 years out of those 10 years. So we're just going to multiply it by 8 and divide it by 10. That's just basic fraction, right? Then we can add the same thing for 2021. So that's 10 members who paid 2,000 each, out of which 9 years, we still treat it as a liability. So 9 by 10. And this results in the total life membership fees to be treated as a liability to have the amount of 27,600. This is our liability which we should subtract. So that will be minus 27,600. And this results in our opening accumulated fund to have the value of 136,470. Now remember to show this working in the working section given below so that you get your markings correctly. I'm just going to start with this amount of 136,470. Now in order to figure out the accumulated fund at the closing date, we just need to add these two amounts. So that's going to be 136,470 plus 5,630, which results in 142,100. This concludes the third part of this question. We can now move towards the fourth one. Okay, we're given additional information. The management committee would like to buy the club's own premises, but additional finance is required to carry out this plan, and they are considering two options. So option 1 is to apply for a long-term loan from a bank, whereas option 2 is to obtain a personal loan from a wealthy member. Now we need to advise the management committee which option they should choose by justifying our answer. And this is a 5 marks, which means that we need to have at least 4 justifications and 1 decision. So let's talk about the long-term loan. Always remember that collateral might be required for the long-term loan. So we can just write that down. Collateral is basically security. So you can write down collateral or security might be required for a long-term loan. The next thing that we need to know about long-term loan is that it has a fixed term, after which we need to repay this loan to the bank. So long-term loan has a fixed term, and the bank cannot ask for this money back before this fixed term. Now for option 2, we are trying to obtain a personal loan from a wealthy member. So always remember that personal loan will charge higher interest. So higher interest rate will be charged on personal loan. But personal loan will be quicker to get because there are little formalities involved. Personal loan is quicker to get because of little formalities involved. Okay, now we just need to give our decision clearly. So personally, I would advise the management committee to go with option 1 because there will be lower interest rate and also it has a fixed term. But for personal loan, the loan might be recalled anytime. So there is not a fixed time that the business can plan for repaying that particular loan. But in long-term loan, you have a fixed plan because you need to pay that amount after a certain number of years. I'm just going to write that down. So the management committee should choose option 1 because it will have a lower rate of interest and a fixed term. Alright, that is all for the fourth part of this question as well as the entire question. If you found this video useful, make sure you like the video and leave a comment below, and make sure you subscribe to the channel and hit the bell icon so that you do not miss any of these videos in the future. Thank you.